Inflation is up and the markets, Bitcoin, crypto are down at the moment. So let's take a look at what is going on. There's some news out there, a lot of stuff going on in the space. But right now, markets were down as much as 500 points, or at least the Dow Jones was down as much as 500 points early on. But it's bounced back this afternoon, which the markets tend to do a little bit. I'm recording this at 11:43 a.m. Eastern Standard Time. Markets close at 4 p.m. Eastern Standard Time. And a lot of times when the markets open down big, they'll bounce back a little bit in the afternoon around lunchtime, and then they'll continue to sell off into the close. Or if there's good news, rally into the close. And again, like I always say, you want to watch the momentum into the close to kind of really gauge investor sentiment. Today is the last day of the month, last day of the quarter. So a lot of rebalancing going on. So this inflation marker that the Fed really watches that came out today is kind of what's putting pressure on the markets, because they recognize and realize the Fed is going to have to continue to do what they need to do, which is raise 75 basis points at the next meeting, maybe 100, depending on how CPI prints. So markets are getting ahead of that. We have the long 4th of July weekend. Traditional markets, banks in the United States will be closed. It's a federal holiday. So it's going to be a big weekend for crypto. And there are some speculations out there that you might see a big sell-off in Bitcoin and crypto over the 4th of July weekend because of the end of the quarter rebalancing, end of the year rebalancing, or end of the month, end of the quarter rebalancing, and just all of the things that are going on right now with crypto and the contagion in the space that we talked about the other day with a lot of the DeFi protocols, lenders, struggling, miners struggling, with the price, they're underwater. So there's still a lot of leverage in the system that has to unwind, and the miners are under pressure. So they have to sell in order to keep operating. And some of them are, behind on their notes and defaulting on their loans, things like that. But anyways, the Fed's preferred inflation measure rose 4.7% in mid-May, around multi-decade high levels. So that's why the markets are reacting today, because all of this talk from the Fed and the government, the administration, economists that are saying that their inflation has peaked and recession is not on the table. We all know those are talking points, and they're just trying to talk down inflation and people's concerns. And sentiment came out the other day, and it was the worst rating for consumer sentiment in history, basically, or in a long time. And even people at the top end of the income spectrum are more concerned about inflation than the bottom end of the spectrum. And of course, we're seeing layoffs and other things that are happening. So some of the other news in the space, the big news is the Bitcoin spot ETF, Grayscale's application was turned down. They immediately filed a lawsuit. So it'll be interesting. It'll be interesting to see how this turns out and how this lawsuit proceeds, as we've seen with Ripple. XRP, that lawsuit can take, lawsuits can take some time when you're going up against the government. But, Grayscale has been trying to convert its Bitcoin trust into a spot ETF. It's, applied multiple times, gets turned down each time, and still the same issues are being recited. And Tether is one of the big ones. So, really people should be applying pressure to Tether to clean their act up and go ahead and get a, credible audit done by one of the big 10 accounting firms out there, and just give full disclosure and open their books up and just be transparent. That's one of the things that keeps being cited by the SEC in terms of the manipulation in the space, the corruption, things like that, is Tether. So if Tether would just be open and honest, open up their books and put it all on the table, that would put a lot of that to bed, and some of these things could get approved. But again, Tether obviously has something to hide, or they would do it. The only reason you don't do that is because you're trying to hide something, and they're trying to clean it up. So they're trying to bury everything, clean everything up. And of course, they say they're working on a full audit. They have asked attestations, but you're just paying somebody to give you the opinion you want when you do an attestation. And even full audits, as we know, we've seen with public companies, we've seen with banks. Those can be manipulated as well. The information is only as good as you provide to the auditors. But when you start digging around in bank accounts and start following the money trail, that's when things come out, and they're talking about proprietary secrets they're trying to protect, which is basically, all of the things that they are doing that they should not be doing, money laundering, whatever else it is that they've been doing, printing tokens, buying crypto with it, printing UST, buying crypto and selling it to boost their cash reserves and make money. they're trying to figure out a way to cover that up and hide it. So when they do get a official audit, if they ever do, they'll be able to, somehow, sweep it under the rug. But you get a serious forensic accountant in there looking at your books, it's going to be hard to hide it, at that scale. So anyways, that's what the space needs in order to approve, a spot ETF is this challenge. We'll see how this goes. Not sure, it could take 12 months, could take 2 years. We'll just have to see how it goes. And, again, it's the same things that the SEC keeps citing in terms of what, why they won't approve one. So it seems like the simple solution would be, hey, get these other players on board so that that stuff can be cleaned up so they can approve it. Sam Bankman-Fried is out there continuing to try to rescue the market, which as he digs deeper into some of these things becomes more difficult because, the books aren't always as clear as everybody says. Three Arrows Capital has misled regulators in Singapore. They keep, it gets deeper and deeper with Three Arrows Capital and, in terms of what's going on there. Sam Bankman-Fried of FTX is, continuing his acquisition phase. These loans that he's providing to some of these companies are obviously, laying the groundwork for takeovers. And, so we'll just have to see how all this plays out and see which, investments actually work out. They did want to get involved at Celsius at one point, but they just could not decipher the books in terms of what the assets were supposed to be on the books that Celsius said they had, apparently weren't there. So they kind of walked away from that. Something we'll talk about in a second is obviously Bitcoin and the price action going on there. And then a spot BTF, a Bitcoin spot ETF is launching at Euronext Amsterdam Exchange. So this will be coming soon. It's going to be a spot ETF, the first Bitcoin exchange traded fund, spot Bitcoin exchange traded fund will be debuting. The only other one we've seen was Canada, and that one unwound pretty quick. So, there's two schools of thought. Some think that a spot ETF is a good thing, will be a good thing for price. Some people don't think it'll be a good thing for price, at least initially. You might see, some knee-jerk reactions to that, to the downside, if and when one gets approved. But at the end of the day, what a spot ETF would do would allow, obviously more institutional access to Bitcoin, that a lot of people that don't understand how to use exchanges, wallets, things like that can do. 401k and retirement plans, could be opened up to it, things like that. But I'm sure there'll be, there's going to be a lot of, regulation around that. So a lot of things need to be cleaned up and worked on before, that's going to be allowed at scale. So another question that was asked the other day, somebody was saying, what exchanges should you use, or which ones are safe, which ones are at risk? And look, here at the end of the day, you want to look at, so like I use Coinbase. I don't, it's just what I use. I've been using Coinbase Pro. They've been around since 2012. They're a publicly traded company in the United States. They're regulated. But again, that doesn't mean they're safe, right? Because we've seen publicly traded companies that do things they shouldn't be doing, go out of business, go bankrupt. So, Binance is one of the largest, there's Binance US, but, there's a lot of speculation and scrutiny on Binance. FTX is another exchange that, more and more people are starting to trust. There's crypto.com. The one thing you want to look at is any of these exchanges that offer staking rewards, double-digit returns, they're just as bad as, everybody else. If somebody's offering you double-digit returns in the crypto space, you have to ask yourself, how are they paying those returns? And as we have seen with what's going on with the, in the DeFi space and with lenders and things like that, the only way they're doing that is by investing in other more risky things, or lending it out, levering it up multiple times to try to pay those returns. And that only works if price is going up. Once the price rolls over and starts going down, they just can't do it. It becomes unsustainable. Everybody gets liquidated. And that's what's going on right now. So if you're looking at exchanges that offer rewards, they're at risk. And, all of, the tokens on the exchange, if they go bad and lock them up, just like we've seen, you can't redeem, your tokens or sell them. They could go bankrupt. The assets would be, will be tied up in the bankruptcy. Many of the exchanges sent out disclosures last month saying in the event of a bankruptcy, you do not own your tokens, that they will become custody of the bankruptcy proceeding, just like we've seen recently with The other exchange where the receiver, or not the exchange, but 3AC is being liquidated. The receiver stepped in, takes over the assets and liquidates it. That's what happens in a bankruptcy. It takes time. So everything gets locked up. So at the end of the day, you want to keep your coins in your wallet, in a hard wallet if you're long term and that kind of thing. If you're trading, then you just got to find an exchange you trust and things like that. Another question was, do I keep cash in the bank? Cash is king, right? You want to take advantage of things. And yes, I do have banks in the United States that I use, major banks that I use, Bank of America, Citibank, the largest banks. They have FDIC insured accounts. If you have large sums of money, there's other ways that you can spread that out through CDs, money markets, things like that, that you can hedge against any kind of a bank failure. But even like in 2009, we saw banks fail, right? So, even banks aren't safe and immune to failure and, liquidity issues and things like that when you're in an environment like this, where the Fed is sucking liquidity out of the market and you're looking at recession. So you got to be careful, you got to be smart, and you have to expect that whatever you're dealing with is going to fail right now. As far as the exchanges in the cryptocurrency space, things like that, there's just no guarantees, nothing is safe. I just use Coinbase because it's, one of the oldest. It's a publicly traded company. They are regulated. There is some insurance there. So, to me, I feel relatively safe with that. But if you're going to be a long-term holder, then obviously, you want to get that, get your, coins off the exchange and into a hard wallet offline or whatever mechanism you trust. But, just be leery of crypto lenders. The DeFi space, I looked at, Gemini, and Gemini's got some exposure because they've put money with Genesis. Genesis is a crypto lender. They're having trouble. So, I mean, it's just, there's so much liquidity and contagion in the space right now. And that's why you're seeing struggle, Bitcoin struggle and crypto struggle, because all these things is going on. The real question is, what's going to happen now? We took a look at this, yesterday. This is Bitcoin on the hourly, continuing to roll over and unwind and prepare for the next leg down, just like it, did back here, earlier in June, ahead of the Fed, right? So markets are, continuing their march downward ahead of the Fed. We're looking at, traditional markets here, the Dow, the NASDAQ, the S&P, all kind of doing the same thing. And the same thing's happening in the crypto space with Bitcoin, Ethereum, all following the same, all the major altcoins, the same pretty much exact price patterns and price action, especially ahead of this 4th of July weekend, where, there's less liquidity in the market, less ability to, liquidate, and pump prices up. So we'll just have to see what happens. I mean, nobody really knows what's going to happen over the weekend, but we do know what has been happening and what's likely to happen next is that, the inflation print is going to come out, next, July 13th, that and CPI is going to come out. It's going to be hotter than it was last month. So the Fed's going to have to do their thing. So the market's going to unwind ahead of that. It'll probably bounce on the day of the actual interest rate hike. And then we'll see where the market settles out from there. And, if we can start to maybe start looking for a bottom. And again, you really can't expect to see a bottom come in until we know that inflation is at least peaked, at least leveled off. So you have to go month to month, inflation report to inflation report, and wait for inflation to level off so the Fed can at least, start to think about slowing down, not stopping. We're not going to see a reversal or a pivot unless you see something really drastic happen, but at least maybe they can slow down a little bit if inflation starts to come under control and even drop a little bit. And that's when we can start talking about a bottom being put in and things like that. But right now, in the interim, like we've been talking about, it's all about buy the dip, sell the rip. And there's nice little moves being made and, buying at these levels and selling, up here at these levels and things like that. But right now, what we're looking at is the next leg down. And we kind of looked at that the other day. This move here, the last one was, 29, 30%. This move here, 40%. So what can we get here? Somewhere between 30 and 40%. And, right now that puts Bitcoin somewhere around 14, 15,000 down to, 12, 13,000. That's what 30 to 40% looks like from where we are right now, where Bitcoin is right now, continuing along this pattern. So let's take a look at a couple other things real quick. Of course, we've been looking at the 200-week moving average, and Bitcoin looks like it's going to close again below the 200-week moving average. And here's something that's interesting to look at with that. So let's go to our Gaussian channel that we've been watching. And here's something interesting here. So the Gaussian channel is continuing to proceed. Like we said, the last time we saw that, it remained in the red before it came up out of it. Well, the whole red cycle remained for about 39 weeks, but price kind of, let's do this. Let's look at when it broke down below the range and then it popped back up in there. So when it broke down, it was right in here and it popped back up. That was 20 weeks. Okay. So if we look at from where we are right now, where it broke down, we are 7 weeks in. So 20 weeks puts you out to basically September. And let's look at how far it came down. And again, past history doesn't mean a whole lot right now because this macroeconomic cycle is so different this time. So I'm not so sure that any of these rules of thumb apply or work or can work, but right now it's down 44%. And the last time Bitcoin broke below the lower line of the Gaussian channel, it dropped 40%. So right now we're already below where it was last time. We're below on the 300 or 200 week moving average and getting ready to close below it, which it hasn't really done consecutively in the past. So the question is, last time it came down about 40% below the bottom of the channel and then consolidated sideways before it came back out. Right now, we're down below, and we're going to continue to consolidate toward and drop a little bit as it goes along. Again, this time is different because of the economic situation we're in, the political situation we're in with war in Ukraine, things like that. There's just a lot of different things out there that have a very different risk profile than Bitcoin has ever seen in the past. So a lot of these indicators and past history that we've been looking at for Bitcoin in terms of how much time it spends in bear markets and bull markets and things like that, and the 4-year cycles and those types of things, right now those rules just aren't going to necessarily apply because a lot of them have been broken, right? Going below previous all-time highs. Right now Bitcoin's trading below the previous all-time high set in 2020 or I'm sorry, 2018. So right now it's it's below the peak back then. That's something that's never happened before. So we're in new territory here with this cycle. You can see how you can get these nice bounces in a bear market. Typically what's a normal bear market cycle in Bitcoin. We talked about yesterday how Bitcoin's just been in a mega bull cycle, and these things are basically corrections on the way. And right now this is probably the first real bear market that Bitcoin's ever seen or participated in, and crypto. So we'll just have to see how it all shakes out and what the ultimate potential downside looks like. But right now I think the expectations are obviously your next level is going to be that 17.6. So that was obviously previous support of the lowest point so far in this little range that we've been in. And so we'll have to watch that. If Bitcoin breaks below 17.6, then you're probably looking at 15,000 level for the next area of some kind of previous resistance on its way up before ultimately your last line of defense is about $12,000 right in this area here. So that could be where it's headed. We'll have to see. This 4th of July weekend could be interesting coming up. I'll be doing a video tomorrow before the weekend. And, if anything, breaks out over the weekend, obviously I'll be putting some videos out there. But right now, that's what we're looking at. 17.6 is your next level. If it breaks that, then you're, Bitcoin's going to get down to this 14,000 level. Ethereum is kind of following suit. It's in that $1,000 level right now. Last line of support there was at $860. And then if that breaks, then it drops down into this, $750 range that we've been talking about, and then ultimately down to $400 or $500. So those are the potential targets right now on the table for Bitcoin, Ethereum. Major altcoins are going to continue their march. The dominance that's been, topic of conversation. Bitcoin is still dropping. That means altcoins, they just had a much nicer bounce because, again, they're cheaper, less of a market cap, so easier to manipulate, easier to get bigger bounces out of. And, eventually the altcoins will continue, their drop, and, Bitcoin dominance might pick up again a little bit. So, these are the things that I'm looking at, and I will see you in the next video.